Good morning to this live session, another 2 hours live with me, Anton Hapfel, and the Bund Future. And I hope you have already prepared your big picture, maybe have took a look at my preparation and my hypos, and so far we made some ticks to the downside. Yeah. I mean, the market participants used my range long level from the big picture preparation, this level 04, 05. When you look at delta, there were no really significant attempts. That means you see that at this time nobody really was looking for trapping people into a breakout. That means it was a situation where the delta, except this little long move as we're reaching then the top. But overall, you see, delta was kind of weak. And overall, that means this level from my big picture preparation was of course important. A range short level, the upper pre-market volume edge and the minor value volume edge, 179.04. So that means, look, this move took us completely to the other side of yesterday's range, and even below, even to the area where the area is in the option theory, the area of the low of the value, the yesterday value area low, where the strong lows build this low volume node. It's a low volume node of importance, like it was yesterday. Even though the afternoon market of yesterday could even extend this low area, but you see it was then a very, very big excess on the downside. So that means this attempt to the downside was then killed immediately. Within a 15 minutes period, prices got back almost 30 to 40 ticks. And now we're back at the bottom. You see this in my screen, green marked area here. This is of course not a trade, open up a reversal long trade, but that is not an advice to do so. And this is not what I'm looking for, but I wanted to show you that at these areas at least, we have, if we see something like this, and now having maybe the chance that price is coming back for a second leg then and got rejected again, that this is at least just from the option theory the best area for a cheap price entering for the long. Why? The guys of you that already had some education with the volume profile and auction theory will know that if we get into these areas, when you look, volume profile shows us then the importance, shows us the distribution and the areas where price were unfair and fair. You know then that even better than clustered situation, that means more things coming together at one certain area, not only the low of a value area, but also the strength of bulls when reaching this area, marked also by the chart, as you can see this excess on the downside, means that this is some information, sums up with this information from auction theory and builds an advantage and edge for you trading. So this is just technically from auction theory and from the cluster situation, the area where today so far was the cheapest price, at least cheapest price area in the theory to get into a long. This is just now from the big picture situation. Now, then there's always, if you know that here is the biggest reward because we have then the chance to trade back into the whole value, into those edges or the VPOCs. We have then a high chance to see again the 89 area, 91, 94, and even the volume edges, 97. So trading through. This is very important to learn and understand that this is just the basic for everything what you make then later. If you're still looking just for development plays in the micro level, and watching only the micro level, you have a very high probability of failing to become consistent, profitable as a trader. But here you can see that this is just a level what was already prepared in the big picture and already show the importance, as this was also here, this volume edge for the short level. As you can see, then it was of course of importance, because this is a edge and this is where short started. We see this in delta, in the distribution situation, how they try to get higher, but then at least always CSC, finding new sellers. Anyway, the thing then is, you're of course totally right that then you have to go on and develop plays at the micro level to control your risk. And this is what we are about to learn and find out together when talking this live sessions every day, or at least 2-3 times a week. This will then also part of our mentorship program, that we will find out in the theory, in some webinars, how to get then understand first how market participants think and work, and then how to read the big picture. Because even it seems to be a little bit boring in theory, this will give you the ground basic confidence then later in your trading. Alright, now to the trading screen. What would be now the possible way to play it, and what is our situation right now? So this, as we do remember, is an area where, and now that is important, this is not the area where we look automatic for longs, but if we see some certain behavior at certain levels at a certain time, then this can be a level with the support of micro picture to control now, additionally to the reward, our risk. And this together thumbs up as a good trade. If you then are able to execute and manage this trade without being influenced by your emotions, then you have just one thing achieved. The biggest thing, in my opinion, to get started, you have a lucrative trade. No matter now if this at the end becomes a winning or a losing trade. It is the best thing, obviously, you can achieve, a lucrative trade. What do we want to see now? We want to go now to this situation and say we have two opportunities now going for a long trend. Technically from levels. First we're talking only the levels, alright? And the levels technically are, if we come back to the volume edge, 74. Then we want to see responsive buying and not strong sell delta. Or second, this would be an even stronger sign. As people coming back now into the short, this is then the second leg, as they coming now back, and we will see, if we see now strong rejection finally from the buy side, that means we want to see that the at the moment absorbing people, bulls, switching to market long. Okay, we would see this here, boom, green, 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 green. So then we would look for an entry area around, I will draw it gray so you can see it. We were looking for an entry area at this area where the first initiative buying out of this structure of a building double bottom, second leg with a neck here, neckline, where the initiative is starting. And then you have the opportunity immediately when you see it, get in, or you wait for the pullback and see responsive buying then within these areas. And always remember and don't forget, what I'm telling is not what will happen now. This is very important because this can mislead and be misunderstood. This is not the thing. If we see, I'm talking just visualization, if we see now at a very important big picture level where we already know this is a cheap price entry, this certain behavior on the micro level, and if only it's totally confirmed by delta and behavior, then this will be our entry. And for this very moment, just the moment where we can tell this is a lucrative preparation and we're having about to enter a lucrative trade. Then the next step will be, before we enter now, to make ourselves clear, where is then the target? Where is the target? And so far, for the moment, the target area will be around, first target around the 90, 92, 93, 94. So we know then, additionally, this is our first short-term target area. You see, this is a lot of work, of course. One day this will become more automatic in your brain, and you see it is impossible then during the process of execution to handle all this multi-cognitive forcing elements. This would be not possible because your brain cannot work with so many informations at one time. But it's just a theory. But look how good that is, that we have some clear understanding of the situation. We didn't waste now our risk, our money for a possible trade because we knew and we see that this is not the way we want to look at. This is not the visualization we want to see at this very moment. This is not the very situation because look, there was a second leg. Then some people, you see, tried then, it's right, they tried then to get here in some longs, but you see the longs yet, at least, yet, were weak. So it's not a sign that we see second leg, strong bulls, setting back, responsive buying around here maybe, and then have the chance. This has not happened yet. That means, if you're more clear in your mind, remember the times, many times you may have got into a trade looking at least a little bit similar to this, but at the end of the trade you felt frustration again and again and again. This is why you maybe were in an emotional driven phase. Often your brains at this moment, and I'm start going back, mates, click. You think then you're still in control, and it's some kind of being in the desert and thinking of a situation where you're in the total heat and you feel like a Fata Morgana or something. I don't know if it's in English the same word, but it's more or less some kind of a delusion, imagination. It is a delusion, and you think your brain tells you to see the things, but they are not real. Trust me, it's some kind of mixture. And then, okay, now I take it on, it's okay. But then a few minutes later you see, okay, fuck, that doesn't work. And if you then, when you're back calm and settle and analyze your trade, then you may then find out, okay, damn it. Okay, now I see Delta wasn't that bullish at this moment. All right? But it's just like turned off. Your rationality, your brain is kind of switched off for this very moment. No, anyway, what do we have now? We just talked about the situation, how to get in a possible long back to the initial bull control, at least some little long here to this area. We see that this didn't appear. What to do now? First of all, when we started about the situation, we were already here. So that means we were already too expensive for re-entering the short, because the best situation for the short was, of course, here at this level, because you see here started the initiative selling here, this move. So that means, as you see here, that people coming back into selling, one could have entered here just technically and with confirmation, looking for a reshort situation, call it like this, or you can call it whatever you want. This would be a good situation here to get just with the first signs into the reshort. Knowing you normally get a second leg, even though it failed, you could then have end this reshort with the B named bullish power. That didn't come. So that means also looking from the other side, at this very moment you would be still in a short trade. And now think of what would it be like to be in this short trade. What do you see? You would say, all right, at least we are in this area, because if the bear is really so strong and want to extend this level where we now had a good chance for the long side, it can be also that they want to trade it to the short side. You would now say, okay, they tried to, but see, at the end they got absorbed here at this level, and now you see they get out of the shorts, and now we want to see the same visualization. You would say now, okay, if I see now more bull power coming in, as we are about to not able to build a second leg and still having now, boom, we want to see kicking out of the high here, then you would as short-term trader close with a small loss, with a good lucrative trade, but with a loss, this trade. But for the long side, if you're still looking now for the long scenario, you would do the same thing we talked here. The same thing. We want to see, this is not decided yet. We want to see now, again, what it's starting now. Again, buying power, initiative buying, and a pullback, and then responsive buying. And this responsive buying needs to take place in the area where before the initiative buying started. That means where the people already anticipated the long side. And again, as long as this steps 1 and 2 always is not happening, you don't have to be feared to waste money for nothing, because market will tell you when to enter at least a trade where you have prepared with reasonable arguments, with having then the edge. So right now, you see, this hasn't happened because we saw the first sign of a strength, but I told you we want to see getting out of the structure here, really seeing a second initiative, number 1, and pullback responsive buying would be number 2. So number 1 and 2 hasn't happened yet. It was just number 1, no, not even number 1, but again, sellers coming in. That means you see here at this level, at the value area low, they at least trying to force bulls now getting out in the bigger time frame out of their position and trying at least to play it. Trigger them a little bit. Hey, we're here. Look, yesterday you couldn't continue the long trend. Bears are here. We are also here. Who knows? Maybe stock market is going up quite good. Who knows? We will see. So, but the most important thing, you didn't make here 1, 2, 3 trades with -4, damn it, -5, damn it, -5 again. Like, oh, why can I not trade? So, all right, we make a short break and I will come back if we see something interesting. And remember, the short-term trader would be still in this trade. When he started here at see pulling back and new sell materials coming in, he would be still in the trade because he would also only get out of the trade if he's seeing now the trigger, boom, that the price is crashing with volume down of the structure. That means 1, 2, 3, 4 ticks maybe. This is the risk he has, not more. And as long bulls and bear fighting around here and building some value, the fight is not decided yet. All right, see you. All right, so we are still, it could happen now. Who knows? Isn't it exciting? Okay, liquidity support now. The bulls are getting stronger. We see already liquidity support in the bid. This is the first signs of a maybe coming outbreak here. We already see this now because we see real liquidity is coming in the Bund. 464 contracts, and we will see now if they get into this area and let the liquidity in and even absorb, then we have a high possibility that we now see trigger number one, not to enter, but trigger number one would be for the short guy to leave then the trade, who's only waiting here for the short. When you would see then we get boom, market buying. And we don't have to anticipate. Market will tell us because this is real-time trading. This is delta. Delta is no lacking indicator. It is real-time. Just buying minus sellers, and the result more buying or more selling. That means more market buying or more market selling. That means we see initiative or not. And we don't have to anticipate. We wait now if the phase one is really coming. After weakening selling here appeared in the data, we now want to see breaking structure, and then we get the chance when the prices is pulling back to the area where the initiative was, we want to see at least some responsive buying to get them in a trade. But see, at the moment, they're still testing the low. That's okay. That doesn't mean, okay, now I have to go in a short trade again. No, that doesn't mean that. That just means it's not decided yet. Because Delta is telling us, okay, the liquidity at 83 showed already some interest, and now they're pushing and trying and say, hello, are you still here? We want to see. Is there now new buying initiative? And if this is coming, we will see here in the delta, and we'll see it because in the footprint also, because footprint tells us the same thing, even more detailed. But you don't need it in a liquid market like Bund. You don't even need footprint all the time. I only take a look at this sometimes because the Bund is so wonderful liquid that it's normally enough to see the indication in the delta behavior. Wonderful, isn't it wonderful? All right, you see they're still pushing to the downside, but the good thing so far is the selling at the level 83. When you look at the tape, they hit the bid, but they cannot put it lower yet than the 82. So that means they do test. What we need to see is now switching, only if switching to market buying. And if this is not coming, the short guy will be still in its trade, in their trade. And if it's coming, he will end. Or I would end. But still seeing some little try now of the sellers, and okay, let's wait. And you can train your eyes with this kind of behavior to see how is this now working. And then when we get maybe getting then the chance for the trade, maybe, if not, then not, we of course will do the same during the management phase. There are the same things. This is not, don't get me wrong, but if we now see this bullish market buying, pullback, getting into a trade, this behavior doesn't mean that this is a 100% now perfect. This doesn't mean a 100% guarantee that we will see this price level. Do you understand this as well? This is also very important. But at least it is an edge. It is at least a, I would say, 60% chance that we will see now, that we could see then now the 89 and the 93, 94 level. It's only 60. You still have to know when you're entering so perfectly with everything in control, this kind of trade, if it works out, we haven't seen the sign yet, then you have a 40% around still, 40, to lose this trade. And that's okay, because if you handle it then, that's then the next thing what we're gonna watch, lucrative, you may only get 4 or between 4 or 0 ticks loser. And that's totally okay. And you have to understand then, you have to be proud and clap on your shoulder and say, wow, I did it good. This was lucrative, but market didn't pay me this time. All right, see this, wonderful. You would be still in the short trade. See this, we're still having not the final confident buying that gets us out of the structure. So the short guy here would be still in the short. I think this is really fascinating to see and think with the auction theory. And if you have still basic knowledge lack in the auction theory and volume profile, no shame on you. That's okay. But get into the next weekend and make some courses. Get to the internet. Go to Verniman's site. Verniman, Verniman. Verniman. He's very good in auction theory. An old Chicago pit trader who's very good S&P trader. He has some terrific videos, I think 2 or 3, that describe the auction theory and volume profile. There are also some books, but also good material on the internet. Also, we will provide that in our mentorship program. Of course, this knowledge you need. But if you already have or made some courses, then you will understand then how this reflection of the micro picture and understanding what's happening when watching the delta, this can give you this technical edge you need. May you have it already. Can be. So remember, again, what is with the short guy? The short guy says wonderful. As we got to the highest area yet, starting here, no big initiative buying. You see the delta. Number 2. No big initiative buying getting out of the structure. We see buying, we see the first guys who try to, but no follow-up. Number 3. No big initiative buying. We see some guys, we short before, but at the end the structure is not getting broken. And see how wonderful Bund is. And tell me, do you see something like this in the DAX? Tell me this. Come on, be fair. Be fair. Do you some clear structure behavior? See this. Tick by tick. Starting after the open. When we see the pullbacks, tick by tick. Do you see this? Straight forward, plain, vanilla, plannable behavior in Bund, where you can see, okay, now this is the structure, we are still in the structure. We don't see spikes where we think, oh, is it starting? Oh my God, no, it's good. So this is DAX, it's monkey. For me, this is monkey market, sorry. You may be very good in it, I don't like it. So see this. You see this is even very good for your brain. And if you like to be still fresh after ending your trading session and not being totally exhausted, running around like a zombie because you've traded the DAX for 2 hours as a beginner, what I would definitely not recommend, then why don't you start with a liquid market like the Bund? And the Bund is no bullshit product. It's the most liquid product of the Eurex, of the Eurex, of the German derivative #1 exchange. So this is a very important instrument. And when you're talking to a funds manager, you will see they work also for hedging purpose with this market. It's very good. It's very liquid. You can put a lot of contracts in it without moving the market. Okay, stop talking this. So remember, the short guy is still in this trade. Why not? We talked about it. I think I cannot talk it more clearly. Okay, what would be now his next target? This is interesting, isn't it? He now, of course, can move his stop already to to this area where the next initiative started. So this was around here. So I will put my stop now here. That means if you entered here at the 82 area, then you have your stop somewhere here at the 78. But the funny thing is now look at the downside, and we take a look at the 15 minutes charts. Where we at? Where we at? It's so interesting, guys. It's so interesting. See this here. This is our leg. The leg from yesterday. This was this huge attempt from the bears. Then first got still rejected here. Back to this area where we were right now. Look at this. Wonderful. This is our target area here. And the target area is already be a little bit cutted before. That means we have here the volume edge in the composite. That means this high volume node, this POC, where we're at right now. This will be target area number 1. And the next target will be, we want to see what's happening below this here. This kind of, in the composite at least, from the weekly profile, this lower volume area where the rejection was. So this is very interesting because this can become a huge trade. Because imagine, doesn't matter if this I'm not talking about the probability, if it's 10% that it will become that way, but if, then why should someone get out of this trade? Because what will we want to see now? We want to see now that they take out the low and this area here with still increasing selling volume. And if this is happening, it's more like you're in a trade and watching now for certain behavior appearing or maybe not coming. This would give you the information if I stay in a trade or maybe looking then with a second leg, the same scenario like before, to get out of it. This is very important because what can happen if they take out the yet single print area, when we're looking at the TPO, then we see how strong this area was even in the 30 minutes time frame. Look at it from yesterday. See this single print here? Wow, so strong. That means if the yet from bull in control area not now getting taken out with a lot of pressure, it would be then the sign to stay in a trade. If not, then the picture would not have changed. That means the information we have would still be valid. You understand that? Strong, see it in the chart, strong low, because this is just a long stick bar rejected within 15 minutes, boom, to the upside, closing even here. See this? Open, boom, boom, closing. And you see it also, if you want to see it more in the TPO, you see it here, that this is really, really strong single print. So that means this would be a new information. If the bears are now getting so strong to stay in control with strong volume on the downside, this would mean that you have the chance that we even test the next low, value area low of the profile from Tuesday. That means they could then test this volume edge. We could not even reach then this area here, 58, but we even could get down to the 45 to 48 area. All right. And let's watch now the same thing. We have our initiative from sellers that has started again here. I think nobody can see this because this is so. Let's do this again. Let me do this again. So I see this here. Initiative selling started here. Can you see this? I cannot. I will draw it a little bit lighter red. This should be a little bit stronger here. One moment. So I'm back, sorry. Okay, you see this selling control level. We would do the same thing like here. That means now we see we're at this extension. We extended the low. And what the new initiative sellers don't want to see, of course, would be that we're having the same scenario like here. Mean getting a little bit higher because the initiative already started here and then restarting here. That means this is our selling control. Sorry, here's the selling control. So this will be the same. You understand this, okay? Because we would be about to have an excess on the downside if now the sellers who coming in very strong starting here, even stronger than here. If we see that they get back to this line here and see in this behavior initiative buyers here, initiative buying, pullback, responsive buying, you have a chance to get in this area here for a long with targets then, and we would now make a new target because we have already a new distribution. This is this distribution from the still initiative in selling would mean We have then target area number 1 here, and target area number 2 still would be this here. But only if we see this behavior. Initiative buyers getting out of the structure. And now first we wait, think of it, the guy who is in this trade still, he is still in this trade, his stop is maybe here, I said around the 78. He cannot just get stopped out, or he can of course now secure its profit, and they reached already the target number 1, the 65 level, because 65, you remember, was the first target. You don't know, I show it again here. See this? This minor PSC here, we always go in handling from minor PSC targets to LVN, to minor PSC to LVN. Of course, we also took a look at the shorter time frame when we see there's already some support before, then we don't even want to reach this here, but this lower volume node. But anyway, so you can do it like before. We just extended a little bit more, but the same thing, the same chance for a trade would be taken out with initiative buying here, this area, stepping back, pulling back, and see responsive buying. Then at least you have an advantage, a little edge to get into this trade. With target number 1, the 83. But again, like here, we want to see this behavior. If it's not coming, if this is not coming, initiative buying, pulling back, responsive buying, boom. If this is not coming, this double trigger, we're not going in this. So now we are again at the area where somebody would sell now if he's or she is seeing some sellers coming in. This would be now the moment here to cheap price enter for the reshort. Alright, so if you had some preparation and waiting for this scenario and say, okay, now this is the best situation for the reshort because I prepared this level, this is what makes sense to me, then you now would look for the behavior that boom, sellers coming in again. This has not happened yet. Wow, alright, now we see some little initiative, and from the buy side, that means what we want to see now is pulling back and responsive buying here at this area where the initiative started. So not happening yet. You see even more people sell because the initiative buyers were not super big. I can show you so that you're not getting a little bit crazy, but look at this. This was the initiative of buyers at this moment. You see very, very weak. Only 80 people bought, market 2. And here at the moment where they bought, you see more selling. Boom, 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 boom. So it has not happened. It has not happened yet. All right. We wait now. The guy who is obviously now here because seeing this, the guy is obviously waiting now for the long. So this is we wait for the long. We need to see now initiative. All right. Initiative buying is about to start now. This can be a crazy thing because the more we only get tick by tick, this is then also no trade anymore. This is then another rule. If we are too close and risk reward changes, all right, changes not to our advantage but to our disadvantage, then we don't take on a trade. This is also trading. They're not saying force in it, but I need this trade. That's not what you're gonna do. Because this is something now very complicated. It will become more complicated because you see we already took out what see fast rejection in the candle. That means we're now having a unclear picture. We're now at the 80 level. That means what do we wait now? Now we do need to see really people going in, boom, 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 initiative, and don't be stupid and go on then here in the trade at the top because it's just already too expensive because look how close our first target is then here. So anyway, we wait for the signs, and if only the signs and trigger match to a cheap entry, we get into a trade. So the guy who had seen this boom rejection got maybe into the short trend now, the reshort. Maybe he got in here very here at the low around the 676 now because look at going back. You wait for the initiative buyers. You see It could start now, boom, and as it started, boom, big rejection. So everybody who sees this knows, okay, there is a selling, still selling. Okay, he may enter now here at the 77 area. He's now in this trend, like the guy who waited for some kind of rejection and selling. What happened here? See this here? And this here? When they entered this area, boom, and sellers coming in again. So this was the next moment, the same moment, like here. We see pulling back to the area where the initiative started, and then boom, 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 boom. Some people tried to extend it, but boom, rejection. So like this guy here entered here and then waited for this 20 minutes till it was got into the reshot. This was the same situation here. This is the bipolar moment. You're waiting either for the initiative followed by responsive, or you're waiting for hitting the area, getting into a reshot with the rejection and responsive selling on the other side. That means that what we see here, 9 o'clock, 38 minutes and 30 seconds. Boom, boom, boom. That means here, right now, I would have entered, if I'm looking for a short trend, I would have entered here. And I know now it can take very, very long till they get into the reshort again. Or on the other side, you will end this contract if you see the signs of initiative buying here at the top area. That is important. We can now make it a little bit spread it, this rectangle, because that's just the way it is. That means if we see at the top area of this rectangle here, initiative buying, boom, letting out of the structure, pulling back, the last possible cheap entry for me would be around the 79. Better 78, 77, but if it's not pulling back so far, at least 79. I will not get more expensive into a possible trade. With target number 1, remember, only 83. And if they can stay in control, pulling back an initiative again, then we stay. Because then we have the chance even to get to this low volume node edge area, 91, 92, 93. So this is wide, far in the future, so far. All right, just watch it. And remember, switching back to the big picture, remember what this area still means, right? Do you remember? You're totally right. If you see now and can be able to handle this on the micro picture, the situation here in this 15 minutes chart, you see we're still in the lower area of the value. That means if you want to trade some intraday swing now and get here the very, very cheap, if we get the possible trade here for the long, cheap long entry here, Remember, if you're handling more contracts, this would also be the chance to let one contract in your book, even if it takes long. But because this would be now a cheap micro-level handling risk, but a big reward, getting back here, maybe even to the 94 area. And even to the other side of the edge, so the 96 or the 04 area still. This don't have to be happen, but you have a high probability in. Because if we see now in the micro picture here how to get into the play, in the big picture, this could become here the excess on the downside, the failure means in the big picture, they even on the big picture 15 minutes charts, they say no, unfair price here, and then we go back to the value. You have to understand this. You're trading in the big picture, but in the micro picture you make your trades, you're executing your management. But the reward, the chance, you take from the big picture. Okay, quick back to the short term, because we want to see if now the initiative buyers are coming with a little bit pulling back and get us the chance then to get in cheap into a trade. What also can happen, of course, is this is not appearing the signs, or they're so fast that they don't give you the opportunity. Then you have a second chance, because the second chance would be then, if we really take out then the second initiative, the open range high and this selling pullback level, you can watch then for the same behavior at this level. That means if we say then here, they take it out with increasing buy volume, weak pullback, then there's a second still good risk reward trade, at least to get to the 94, or then even to the O level, 179 straight. This is still okay. We will see. But not the signs yet. You see already still the bears trying to stay in control. That means bulls having a weak hand and yet cannot take out this microstructure here. But that's okay. You see, the short guy would be still in this trade. So I would be still in this trade because we only see impulse phase number 1 that failed so far. That means, okay, you can put the one that entered here at the 77 and had its initial stop maybe 2 ticks above. So this would be my rule at the 82, could now pull it to the 80 level. After this has happened, he wasn't stopped out here then. See, we only reached 79. So that means you can do it the way you do. I would always pull it a little bit closer when you see a second initiative in selling, taking out the microstructure, failing the first time, knowing it's still in control, but I still don't want to give it so much space as the initial stop here at this moment when we see people getting back into the shorts. Remember when I said I would enter here then at 77, my stop would be then here. When I see this here, I will pull my stop from here to maybe 1 tick closer here. Now you not get stopped out, you're still, and now you see initiative number 3, this is like here. This is now the same situation like here, but the difference is, this is the same situation like here. So like here, number 1, stop would be closer, put you here, you wouldn't get stopped out. Now the next selling is coming in, this is like here, but you see the difference already. Please, look at this. Selling, you see this here in the delta, selling. So this was a lot stronger, this first selling wave and this second selling wave. So here, sorry, I marked it wrong. You see that this selling here, initiative, impulse phase 1, impulse phase 2 was quite strong. Compared to this situation, selling not strong. Selling, not strong. Do you see the difference? Doesn't mean that I put now into a long. But I just want to tell you that now the chances are even getting bigger. This is just the science. You have to how to treat it, how to describe it. I gave it one day. I gave it the name. This is like a bias marker already. This is something you have collected and then put into your box when you made the decision upside here. You have then an additional positive on your side advantage because you see that the attempts number 1 and 2 so far were quite of weak. So this doesn't matter if now strong selling is coming in. Then that doesn't count, okay? Nobody cares. Then this would be just randomness, nobody cares. But if we're not able to get into now with huge short selling and get below this area, but we're going back to here and now see the initiative buying, we even have more advantage at this moment because here we didn't see the failure signs that have proven us on the downside that the sellers are not so strong. I hope you understand this. This is even a better situation now because this could become a failure to get into, like we had this powerful more selling here. You see the initiative here in selling was much more bigger here, all right, than it is so far here. That doesn't count again. That is no worse for us again if they're not coming up here again now, because sellers are still in control. Here, that's everything okay. But if we're coming now still with bullish delta back and see initiative buying here, pulling back, then it's even a better chance with initiative upside here, boom, to see this level. It's a higher chance. Understand? See this? How the bull's getting more confident now. That means the people who trying to push and sell, of course, getting out of the position. But of course, you can understand now that there are also, with a high probability, already some people, of course, trying and see the situation and starting with their money and with a bigger leverage, with a bigger account, to get into a long, and made this at the end, knowing that this could be at the end a very interesting pattern here, because could be a failed extension to the downside. That means we're still below the yesterday value area, as you see here. But overall, this area where here now the selling started again and again, the initiative selling started here. So this is where we're marking then our bull control level here. But overall, you see, of course, that other people also see this, that comparing to this strong selling here in this area where we are still comparing with this level, this is the same situation like we had here, is here. But the delta was at this time, why is this always marked? Very, 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 very strong. And now see delta at comparing in this situation here. No, that's not right. Sorry. You see this here? It's not so strong anymore. This is useless as long as this is not happening now at the top area. This is just a sign, pre-signs, that helps us again when we get with the price up to this area and then see initiative buying. Then we can wait and go here for the long with the target number 184. And then we give them the time to pull back, play around, because we know with a second position, if they even take out with volume this area, then this could be a high probability that this is finally a failed and an excess on the downside, and you have all chances, the best, cheapest price in the big picture. But we need to see this initiative, not even going on now, but initiative buying needs to come in. If this is not happening, even if it's very pianissimo, but the bears hidden in the shadows, they are still in control. At this level, and of course, and also at this. But if they, at least the bulls can take out and take back, get to the flag here and take this level, then we have the chance to number one, and then even a more far away and getting more into a situation where we can say, okay, this is the single print, this will be the nexus. This is just high advantage, but bulls still cannot take over totally, finally. We watch. So if you have wondered, this was me looking at the screens, but I'm not sure if you want to see this. You see, it's a little bit boring. It's not so easy to stay concentrated, but we wait for this one opportunity, one good trade. And beware of your emotions now. What also can happen if a trade fails, then you may think, oh, I've waited now. I prepared an hour for this trade and now it failed. This can also happen. This is trading. But okay, stay concentrated. We now at the moment where we see the first time people starting to get aggressive more in buying again, and we're waiting now. We're waiting for this very moment. We want to see them taking out this structure with initiative. Okay? As long as this is not happening, this strong buying taking place here, but not here, is only to trap people. This is just a bear. If you believe it or not, this can also be a bear. A bear who trying to get higher, forcing people to get into longs, boom, 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 boom. He immediately closes the position at the top area, 78, 79 again, boom. Trap the buyers, boom, and sell big money. So that means the people that thought that the initiative buying already starting, boom, 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 got in, are trapped now and have to go. So this doesn't count. You see that then in a second later here in Delta that this was trying to force people into longs, trap them, boom, and sell. They know then when they sell and getting lower that they have to close. And this closing of a long, remember how to close this long then at this moment, boom, is by a short. It means the people who were in the short trying to get some liquidity. Because people get then into longs, and when you open up a long, boom, you can collect these pieces as a seller. And then when you're reselling and you're strong enough to resell, you have the advantage that with the selling of the stopped out people, your price is even getting faster to the downside. Okay, take care. We're now in the situation. Opportunity number one could be here when we pull back and see still responsive buying. Opportunity two would be then when we're reaching our target number one and was not in this trade because we have not get the pullback, then we wait for the same scenario up here. We will see how it works out. Okay, take care. Now we have the pullback scenario. But you know, cheap price would be not for me above 79. I will not go for a trade above 79 because this would be too expensive. So you have to be patient with the right attitude. If you're not getting the re-entering, the pullback, then so what? You didn't get it, but you're not jumping here after the price and get into expensive because then you're trapped again. So we need to see responsive buying now with this pullback. This is important. Because if this pullback not happening with responsive buying, the bear can kick you out of the house. Okay, we see first responsive buying taking place now, but we are very high. Remember, our target number one is here, the 83 level. So this would be way too expensive now. You need to wait. It doesn't matter. Normally you get a pullback in a long building accumulation situation. Normally they accumulate with the probability of testing this area here back. And if not, we wait patiently for increasing buying volume here and for the same scenario. But you see how everybody sees this, what I have prepared now for almost half an hour. You see how more confidence now the people are trying here to get into the long, because knowing now the probability rises for a at least chance to get to back to the 84, 83, 84, 85 area, and then even made this at the end that the bears have failed to extend the vested value area low. So this is the thinking of everybody. All right, now we're having some little pullback situation. That means now you can think of where to put your stop and where to enter. If you enter here at the 79 or 80 area, you have to know at least that your stop must be at least at the 76. This is what needs to be allowed, because this is where the first initiative starts. And I'm not in this trade yet, because I wanted to go at 79. That means this is still the thing I need to get. Everything else would be too expensive for me. And yeah, you can do it your way. If you have entered here at the 80 area, 81, then you have to know, but your stop must be at the 76, 75 even. And this is not good risk reward at the moment, at the micro picture. Okay, for the big picture, it's cool, it's good reward. But then it depends on your style of trading. Then you have to have the time now for an hour to wait till we get to this area. Okay, target reached without me. Now there's a different thing. Now we're reaching the target. That means people who are in this position are already about to take some profits here. You will see some technical reaction. At least finally at the 85 level. So in between 83 and 85 you will see definitely some technical reactions. That means people are a little bit pulling back. But now we have to measure the difference. That means this pullback now is not the same like at this moment. A pullback now is after people reaching their first position. That means if you want to re-enter and enter the position now here, you have to know that we're still back then in the activity levels for the bears as well. Especially below the 72 level, because this is this high volume edge from the profile so far. And right now we see the technical reactions I was talking about here at the POC. And so you should have already taken at 83, as I told you. If you entered, this was only 3 ticks, but you should have already taken your first contract out. Because we know this is all bearish control level, and we talk in long-term big picture only with a second or third contract. So maybe we get a chance back now and see in responsive buying here, then it's still okay and good to enter here at this area. When we see here responsive buying at this volume edge, at this separation area, this will be okay to re-enter then. And if you're still in the trade with the second contract, you know your second target would be here, this area. What you not want to see is that when we pulling back to this area, increasing sell volume below the 77. But you have to know that you have to be patient and wait, and this can happen as they trade around first here. And below, sorry, not the 77, even below the 72, 75, 75 would be the maximum I want to see here to say the bulls are in control. But if they go on with sell volume here below, this would not be good, because this was the initiative buying starting getting out of the structure. So this would be then normal here, but not normal to getting with selling volume below this area here. This would not be good. And I would not move my stop here in the long trend, not before we see then that the initiative breaking out here, failing with huge selling volume. If this is happening and that we break out with huge buying volume, at this moment you can pull your stop closer to the entry level, because this would then phase number 2, impulse phase number 2 starting, and this would be a good sign. All right? It would be a bullish sign, and if we're then with course with the price around here, 86, 87, 88, most definitely what we then not want to see is that price is getting back so far again. All right, because then we want to see the structure, boom, and finally then reaching it. So if this is happening, impulse phase number 2 now, we say measuring starting here, impulse phase number 1, consolidation, allowed to pull back, can only pull back even here. But as soon as impulse phase number 2 starts and getting up above the open range here, boom, then you can pull your stop to the entry. Remember, then you got position 1 paid at this level, and your position 2, you're paid at least 0. So no risk. No risk. That's the best thing you can have. A no risk trade. For me, this is the second entry area now. If we see initiative buying and weak pullback, weak, I mean not from the price, but from the volume. I want to see initiative buying above the open range high, taking out this level, getting back into this main distribution. Look at here, this is the main distribution from yesterday, starting here. It could lead to a move up to this area and then up to this. So I want to see now they taken out the high, and then want to see weak pullback to re-enter. For me would be then here, where the initiative started, from here, away here, would be my bull control level. That means my stop would be then around here. This is also the sign for you that if you're entering and pull your stop now to the entry level, you can then even decide after the pullback and starting again to accumulate, you can even pull your stop closer. Like my stop that is set by a possible entry trade happening through the initiative, happening here at this level. So you have to think every step by step. So the initiative was not here yet. Remember it. This is still the last bearish control level here from the overall shortish move. That means we need to see now bull staying in control. And congratulations if you handled this trade good, which I could not because this was just not my play, because market is a little bit slow here at this moment. He wasn't pulling back. So anyway, if you were more aggressive and handled this, congratulations. Then if you see now the initiative kicking out the high here, the open range high is exactly at the 86. So this has not happened yet because this was only one tick extension. This is not, I don't count this as an extension. I want to see at least 2 ticks and want to see more volume. And if you see this, congratulations, then you made it perfect. You cannot make it better then, because you waited patiently, you see the behaviors, you see how the market moves, and this is then crazy, crazy good. Crazy, crazy good. And now you can then wait for this trade to hit this wonderful areas at the 93, 92, 93. And you made only with this trade just very relaxed and cool from the 80 area, 13 ticks, and even can let a third position in at a home run, possible home run trade, which could even lead to the 179.04 area. Everything positive now. We have a strong initiative. We saw the weak pullback. We took it out now by 2 ticks. So I would let your position in. You've created here. You can pull your stop now tight below this area. We'll put it here to 80, 81, 82. And everything under control so far. Of course, there are some bears who try to play it level as well. But the bulls are overall have a little bit advantage as long as they can stay control in this bullish level they have. on their side created now. There's some bigger rejection now, of course, but this is now the part of we're not in control of this trade, because they still can lead to a big move to the upside, the bulls, because we know this was created now. And we have an advantage because you see, everything weaken up to the downside. Bears are also here. You see now they trying to protect. The bulls trying to protect. They put some very much liquidity here into the books. And we know our target area here at the 93, 94 is now more probable to be played. And if it's not happening, then everything is okay, because this was a lucrative trade and you played it very, very good, because you waited all day long for this situation, that initiative buying coming in at this level. Your stop is now protecting everything. You made your first contract, you're waiting now for number 2 to get here to this level, and you know you let the trade take in its time, because it is in a bullish micro level, bullish micro bias. And see, not only me, I was only not forecasting this, but I can forecast if this is happening like it happened. So this was the trigger, and you see now how confident the bulls are, because they think, okay, failed breakout to the downside. You see how they push the liquidity here. We have 700 contracts at the 86. We have 500 contracts at the 85. So you see, at least they trying to play it. Why not? They know the bears are here. This is bearish control level, but they also know now from the longer term, the micro picture, now the bulls, at least here we have some kind of advantage. And let them pull back and play around here. But we at least trying it now, and we now having the advantage. We cannot control what is happening. What we've seen the last seconds here, especially the last 1 and 1.5 minutes, was more bears coming in again. But you see also, yet, absorption took place. Bulls are not giving up so far. So this is again this area where I told you this is the most uncomfortable thing as then a trader when you're in this trade, because you may feel now this uncertainty. And that's right, it is. I cannot tell you and nobody can tell you what will happen next. But as long as we see the signs and know where's our stop and see that there is absorption, also gives you some little bit confidence and say, okay, that's it. Of course, bears, I knew this before. Bear will play this level as well. But we have a small advantage on the bullish side. And you see, as they put now more pressure on the sellers, they got absorbed. That means bulls don't give up so easy. It may happen. It may happen then that at the end the bear will win, but it can also happen that the bulls say, no, we stay in control. It's okay for me. Try to let them push deeper and deeper, but I will come back. You never know. That's the moment where everything can happen. You either get stopped out, then this is cheap, or you had this great opportunity, great probability, and read everything the right way, and then it was, of course, reasonable, and say, okay, this was a lucrative trade, and this time it didn't work, or it would only work partly. You only made your target number 1, for example. All right. See, bulls don't give up yet. But what we need to see is initiative and buying continues also at this area here. It's always the same. You stay in a trade, you're not in control for a certain moment, and then the next time you be freed. If you now see the initiative buying, this will be then a sign. The next impulse phase 1, a 2 starting, and then you're allowed to pull your stop again closer, but not before. That's the way it is. I'm sorry to say, but this is then the uncertainty you have to handle. And for me also, it's not easy because I don't like uncertainty. But I know I have to go with my play and find love with the process and joy with the process, because this is what I'm can rely on. The rest is the risk I have to take in trading. So let's wait. Let's wait. They want to absorb. You see this liquidity pillow. That means if they now try again to sell into it, that's okay. But you see how they want to absorb here. Again, 400 contracts, 550, 560, 270. So you see this pillow of liquidity is pulled in here. They still taking it serious. Nobody who wins. But you still bull taking it serious. And you're lucky because you only have this advantage because you measured it the right way before. You still can lose this trade. But you see still the times of the advantage you have. Okay, now. Wonderful. Impulse phase number 2 is starting. Very, very quick now. Of course, they're taking it out. Now I pull my stop very, very close because I know now that we have a good chance. They may pull back and responsive getting into, but we see here target number 192 is now very probable to be reached as long as we don't see now bears coming back very, very, very strong. But a pullback now would be okay. This means please stop not here at the 88 already, but your stop can be maybe around the 84, 85. 84, 85 area would be, this is okay. 84. and then you have to wait again. But impulse phase 2 have now started, and this was the trigger now where you are allowed to move your stop closer, not before. Phase of uncertainty for you now has even get better. Remember, you got this wonderful position number 1, exit here. You're staying because you see initiative holding on, you see absorption, you stop wasn't too close, you give the trade the chance, and now you wait again. What can happen? In the worst case, when you started here, you got a 3 ticks with the first and maybe 5 ticks with the second contract. If you entered like me in this position, what the worst thing can happen? You got stopped out with on scratch. Wow. I don't think that this is a bad thing, isn't it? All right, ladies and gentlemen, congratulations. We're reaching our target. All right? Wonderful prepared trade. Wonderful playing everything together. I think this is one of the most valuable videos I was able to make, not because only of me, but the market showed us today. Very, very, very smart. The market was just very good today. We had some textbook opportunities here. So, yeah. When you spread it, you see even more. You can see even more how the single print situation appearing here. And when you look here at the 2 days profile, you see this area, market profile here, and where we were, and how it then develops. And now high the probabilities that we are, of course, coming back to this volume edge here, 92. In the market profile, it is the POC at 94, also in volume profile. But I think I cannot describe it, stronger. That there were the 2 entries we already prepared at this moment when we say we want to see initiative. Then is the area number 1 to enter the long, and the area number 2 here to enter it. When you see the initiative, you know then the stop would be around this initiative buying area. So this was then how I handled this trade then. You see this here? When the initiative is coming, taken out, and I see here the weak pullback, then I entered in the next candle. For me, cheap price area here. I knew that my stop must be at least at the area below this initiative where everything started, number 1 and number 2. So I knew then I had some 5 ticks stop at this moment. I wasn't stopped out. I was lucky a little bit because it spiked a little bit, but I wasn't filled because 83 were traded only 3 contracts. So everything okay so far. Then you see the bulls coming back. At this moment when initiative started again, I pulled my stop now to -3 to the 85. I told you this live. Minus 84. And this initiative starting here again. See this weak pullback only and bulling power coming in at this moment before I reached my target coming in again. I pulled my stop to the entry area. So this was around then 86. I still let him the place here to 2 ticks because it was just good risk reward now. And look at this, I just will spread it. So you see I'm not faking anything. I'm just taking the levels from the pre-market here and from my prepared level. And you see then that this was the area from yesterday here in the composite profile, the POC. And this is the volume edge. See this here? So I decided because of this is then my area. And you know now if you're handling more than 1 contract, you're still having the opportunity. When you look at the 15 minutes picture, that this here is the area where, again, we said this is cheap price area for today. We now have a high probability to see this volume edge and the high volume node 94, which we already are now. And then you even may see the 97 and the value area high area at the overnight high around 01. So this is then what you have to wait. You know, this can take now some time. If you then intraday swing trading more, this of course can take some time. That means they're allowed to pull back now, maybe for an hour, coming back to the 80, 84 area or even a little bit lower, trading around. They still have every time because this takes normally some time. If you're lucky, it can go fast up. Sometimes it's more fast, you see here. Sometimes they're trading around, till they reach then the next. But overall, this is now the possibility for intraday trade that, you know, we can even reach the 96, 7 area and even the higher volume edge here from the pre-market at the 02, 03, 04, 01. This is then your target with a longer position, with your home run. I call this position number 1 gets you the scalping first target. In Bund normally 3, 4, 5 ticks. Number 2, when you are initiative with the first initiative buying in, is the next selling target, then the next volume edge, the area where we have prepared. Number 3 would then a home run position. That means you're paid, you already made some good ticks, and this is just on scratch. You have your stop on scratch. That means in the worst case you get stopped out with 0 or -1, 2, 3. But at the end, you let this position trading the big picture. You're smart and know I'm trading then the big damn picture and know, wow, I got handled on the micro picture, a cheap enter here at the 77 level. And now I know I have took my profits here scalping in the micro picture. See this in the 15 minutes here? But I know my home run. I give him the time because he may reach even, boom, auction theory, the other side of the profile. So the 97 area or even the 01, 02, 03, 04. Do you understand these principles? It's not easy, I know, to follow those rules then and to stay in a clear mindset. But you know what? That's the challenge. See it as a challenge. Say your motivation have to grow and say, you know what? This is my game plan. Then I have to work on my mindset. You can do it. You're good. Everybody can do it. You're a unique person. And this is then your skill. You know, this will be then your advantage as a trader. If you better and work on your mindset and get behavioral patterns that serves you good as trading and make you feel comfortable and not so much pain and afraid what are okay, what is absolutely okay. But if you think of it, if you can change your trading to the better and make a feeling that it's not so harming you so much, this feelings of pain, imagine how good you could be. When working with this auction theory here, reading by market and volume profile. And as the theory ground basis, the auction theory. Because this is working all time long in every market. The difference is just how it is played in a micro level. And I will tell you, cognitive more resources, eating is DAX or an illiquid market. It gives you more points and more ticks in a shorter time frame, no matter, and no question. But no doubt about it, but in a liquid market like Bund, you have more control and you can be more learning more easily and can be more patient and more, you have more possibility to handle it. All right. Okay. So far, let's have some break. Yeah, all right, you see now, we reached the next target here. That means the volume edge, the POC, sorry, at the 94. Then a few minutes later, after I stopped talking, I think, and you see now how they absorb in the way down. Of course, we see some price movements away from this microstructure from the top area. That means from the 90 we got down to the 86. So this is 4 ticks, but overall you see how they pushed it here. But in this moment here, you see that there's more absorption taking place here at the level 86, 87, 88, especially at the 88 level and 87. There was a lot of absorption in this moment here, 88 here. They traded into this level, 200, 600, 100. So a lot of contracts got traded in this level here, but you see how they absorb, and then it's always the same thing. Selling. But when you switch back, as soon as we see them switching back to more market buying here, 1043, you see that how price got impacted. In this time, even before, that means here was more people selling, but the small amount of buyers here, we make this bigger. The small amount of buying here helped to get the price higher. See this? Selling. But price is higher. That means we see always the same game. The absorption taking place, people even try, sometimes, then it's not every time, but sometimes it happens even that we see more selling, but the short selling got absorbed. So at this level, they absorbed just everything. It was not super much selling, but you can see this when absorption starts and then getting back, boom, to buying. You see, yeah, this means later then when you measure what is happening in this area and how can this help you for your next target, making the decision if you stay in a trade and say, I want to see now they're even reaching the high volume edge at the 97. Is there a high probability now to stay in this trade? Because now you're in this trade maybe and waiting, say, yeah, right now everything is okay. That means bull now more confident. That means they really absorb now. They are now back in their area, in the range area for the long area here. Getting into this level and saying, hello, we took over control starting at this very moment. When I told you there was now a good pullback from me, but you could have entered here. I told you are able. I said it here at this moment, okay, then open up. You can open at 80, but first target is here. Next target is here, which I made then, and the next target would be then the volume edge, and this is at the upside at the area of 97. And in the big picture, you see this, of course, this is the levels from the big picture. 97 here, this is the volume edge from the yesterday main distribution. So, and if you're thinking now, in the trade, will I stay in this trade? And you see this kind of behavior means absorption, switching to market buying again. Hell yeah, you stay in this trade. Of course. Because the bulls not given up. This is normal. We have now a balanced mode at the top area. From the day perspective, from the big picture, it's not the top, but we are in the middle at the POC and at the end of the possible streak to the volume edge where they may test. They could even test the 9904. And you see, bull are in control and you're measuring. Let's call this again a bias marker. This is what I call it. The bias marker is absorption taking place within this balanced phase and bulls trying to stay in control. And when you see this at this moment when we talked about this here, I can tell you, please let your stop just here, like on your entry level. Or if you have entered here, it's okay, allow it to get back to this area where we now build a volume and value. So let it at least here around on scratch and give it the chance to unfold, because you see, when you're in this trade and having a stop here, see what they do here when they go back to this lower area. Absorption, even some selling still here, but price is already going up. That means liquidity is thin. Nobody is high into selling in the order book, in the ask. Do you understand this? This is just some things you can always use then in your bigger picture and in your plan how you trade. And then okay, I let this trade in. We haven't reached the 97 yet. We went to the 95, but we are ranging. I told you intraday swing would be, you need to have some time and need to be patient then. If you like it, go for it. If you not like it, do it like I'm doing it and going for starting with the one lot, as I'm testing these plays for 6 weeks now. This is new plays I wrote in my playbook. That means I'm only, of course, in live account trading only one contract. But at the end, I will, of course, then may get to the second contract and then I trade it this way. One contract, let one in and wait then for the second target. Because big picture now giving me wonderful confirmation. And this is what we do. 10 minutes, by the way, numbers are coming. This is then the numbers, 11 o'clock, genau. CPI flash estimate. This is important, Euro numbers. Previous was 1%, forecast is 1%. We will see if it's better or worse. But this is important because inflation in Germany, we will see. And of course, you know that this can have then also then a higher volatility, impact on volatility. So, be patient, intraday swing. We haven't reached it. We went to the 96, but not to the 97, and it's going on. It's the same thing. You just have to be recognizing what is happening at the lower area of this now balanced phase of the market, and you want to see, do they do the same? Do we see responsive buying? Do we see it can be just responsive, going down, no absorption necessary, but going down and buying, some second time buying? Or it can be like this. It can be selling, selling, selling hard, selling, selling, selling hard, but absorbed, 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 switching to buying. This is the kind of behavior you can measure. Absorption with switching back to market buying, or just responsive straight buying. This would mean just you see it price coming down and then you see one green candle, no super bearish like here, but just coming down, dropping down, green candle, some red testing low and green. This would be some kind of double rejection. This is what you're waiting for, and you don't have to be nervous as long as you don't wait price coming here. Everything is happening in between these marks. We don't care as long as it's not the super bearish candle going from here to down here. about 2.5 minutes till the numbers. All right, people, 1 minute to go. I would secure now my risk, my profits. We are almost at the 97. We didn't reach it yet, but time is running out. We're running out of time. I would not risk now a open trade now with the numbers. I would now, my recommendation just for you, you don't have to do, but my recommendation is secure your risk, secure your positions now. This is the last seconds before the numbers. We're about to hit 97 now. Okay, now, really, latest point now. Please secure your risk. It can now, rising volatility is coming. It's not guaranteed, but it can be. And I don't want to get you stopped out with a move on both directions, even though it can get you in a good direction. All right, now, profit reach, please, stay flat, go flat. Even so it can help you maybe to the upside if the numbers are worse, but please, go flat.
All right, folks, do you see this? We reached all of the targets we prepared in the last hour, even short few seconds before the numbers were coming, where I told you please go flat now, because this is the numbers where we expect some volatility. And you see what happened. Nah? This is the volatility we not want to see. And it was good that you secured either here at the 94, 95 level, this third position, or if you waited till the last tick of the hour before we hit the 11 o'clock and the numbers appeared, we even here got filled. So you got filled at 97. There were 30 contracts filled and reaching the target. So perfectly done, I think, so far. And think of it, this is just some kind of thinking, auction theory, using volume profile, market profile, and taking your big picture preparation. And you see how beautiful then sometimes it works out. Today it worked out, even reaching every target, target 1, target 2, target 3. We're reaching every target. I mean, you made, even with the 3 contracts where you need maybe to go one day, you made 15 or 25 if you take it from the low area where we prepared, or from the higher. Then it was with 3 contracts, 3, 5, 10, 15, and here it was 15, 3, and about another 10, so 25 ticks. And the risk was never bigger than 5 ticks all the time. Never bigger than 5 ticks. And we could handle every time, then pull the stop closer. So I think, this was a really interesting day. And I'm very thankful that Bund give us today this wonderful opportunity, work with delta divergence, work with so-called, I call them bias marker, that we use them for some specific trade later. We was able to work with the initiative and responsive selling and buying. So the full textbook, how it could be handled, and plain vanilla. Bund made it really clear today. And I hope you could learn something. Thanks for watching. Anton Hopfer from Manapa. See you later with the recap.